Hello and welcome to Trading the Trend, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Barb Armstrong. She is a 20-plus year veteran of the financial markets. She's out there to help facilitate the conversation and keep that chat going, which she's doing a great job of that already. And I appreciate Barb being out there to help answer some of those questions along the way. If you're here with us in the live version, you're going to have the opportunity to participate in that discussion. If you are here in the recorded version, welcome to you as well. Leave us a comment. We'll get to those comments as quickly as we can. So what I wanted to do today, since I am not James Boyd, and I look at trends perhaps a little bit differently than James does, and from a variety of different reasons. Barb looks at trends a little bit differently than I do, and Rachel looks at trends a little bit differently than the three of us. So we're going to talk a little bit about some methods that we can use, some means that we can use to identify what is a trend, number one, and number two, how we might enter and or exit from that trend. So this is going to be different, but for some of you, it will seem, some of the things that we will talk about will seem remarkably familiar. So we'll jump into this discussion as we get into the mix here. But a couple of quick housekeeping items as we get started here. Remember that everything we talk about simply for illustrative and educational purposes only. It is not any kind of a recommendation about symbols or strategies or account types or tools or anything else. It is all for illustrative and educational purposes only. Now, I don't believe we're going to talk about options in this discussion. However, it's a good opportunity to mention that options carry a high level of risk. They're not suitable for all investors. Make sure you're aware of the characteristics and risks of standardized options before considering any option transaction. Obviously, we're going to use technical analysis because that's what helps us to understand what a trend is, but technical analysis is theoretical, as is fundamental analysis, as is probability analysis. None of those are guarantees as to what's going to happen in the future. As such, Schwab doesn't recommend the use of technical analysis as a sole means of investment research. What that also means is that circumstances can change. And when we use fundamental analysis, technical analysis, probability-based analysis, news pretty much trumps all of that. And so we can set up the best setup that we can come up with. But there is absolutely positively no one best answer when it comes to trading the trend, when it comes to entries, when it comes to indicators to use. I'll give you that disclaimer right here off the bat. We're going to be using the Thinkorswim desktop software platform, specifically the paper money version. Great learning environment, great sandbox to practice in, but it doesn't do certain things that a live trading account will do. First of all, it's not a guarantee of future success. But second, you can't use studies in scans, doesn't facilitate the early assignment of short options, and order fills will be a little bit different in the paper money account because they're algorithmically driven as opposed to real market conditions that drive order fills in a live trading account. So you might experience some differences as you move your practice from paper trading to live trading. So just be aware of that. Of course, past performance, no guarantee of future results. So as we jump into this discussion here, let's pop over to the Thinkorswim desktop software platform. And I just wanted to really quick establish kind of what's going on in the market. That'll give us our market posture discussion first and foremost. So I'm going to pop over here to our futures grid and actually just the index grid and see what's going on in the index. Another very strong trend to the upside. You know, talk about trend. I mean, that is obviously the nom de terre of this particular webcast. And so as we get into this discussion, the idea of understanding a trend and what a trend is a function of what price has been doing. It is by inherent nature backwards looking. Projecting a trend out into the future is an idea of this is where price is probably gonna go, but there's no way to predict where trend is going to go because trend changes, news changes the trend. So starting to see this move to the upside, we see a breakout of the resistance level at about the 7,400, big round number. We're knocking on the door just above the 7,502, another all-time high, back off the highs though in this candle, but a very, very strong move to the upside. This is a very steep upward moving line. In the intermediate term, we talk about time frames, intermediate term here in this particular case, weeks to months. And so over the course of the last month and a half, the market's been moving up significantly faster than it had been previously. But the overall presumptive bias or inherent bias of the market is an upward direction, because stocks, the companies behind those stocks, have a predisposition to growing their earnings, to growing their sales, and returning that value to shareholders. Now, there may be some nefarious exceptions to that, but if we were to take a look at the maximum time frame here on the S&P 500, that trend has been doing, well, it's been really going up for the last 100 years. Have there been times when it's gone sideways? Yes. Have there been times when it's pulled back? Yes. But what primarily has been the trend direction in this particular case? That's a 50-month moving average, by the way, on there. And you can see that there were very few times. Yeah, and Paul, you're right. Unless an individual company goes out of business, and that can and does happen. But there's an inherent bullish bias. That bullish bias is the reason why, generally, by and large, investors, traders, buy shares of stock. We want to see price appreciation. Now, there are other reasons, dividends and so forth. Dividends aren't guaranteed. Dividends can and do change. They can be stopped. That's another way to generate income from a portfolio, is through the collection of dividends. You can use other types of strategies, like options and things like that. But overall, investors and traders are looking for price appreciation. So they're looking for stocks that are moving in an upward direction. Granted, I know that there are some of you that trade counter to the trend, that sell stocks, that short those positions, that maybe buy put options to speculate on downward movement. Those tend to be shorter term moves than the longer term trend. So the floor underneath all of this is the idea that there's that presumptive bullish bias for the market. S&P 500 is going up at the moment, and it's going up very steeply, and it's been going up. The 200 period moving average has been rising for the course of a year here. The 50 period moving average, not so much. It's pulled back a little bit, but it's continuing to move higher. We take a look at the NASDAQ here. 200 period moving average going up, 50 period moving average going up. NASDAQ is up, up and away. It doesn't mean that it'll continue to do that indefinitely, because it's likely to pull back at some point. It could, but there's no guarantee of when. And there's no indication that because it is moving to a new all-time high, that it has to come down. But I'm going to ask this question once again. How many of you think that this is, this is the question that we usually ask in the live workshops. How many of you look at this and say, that's too high, it's got to come back down? It's too high, got to come back down. I'll let you answer that question. You can either answer it rhetorically or you can answer it in the chat. Either way. Russell 2000 kind of going sideways here, but it has still also been in a steep upward trend, maybe going a little bit sideways at the moment, kind of moving across this level of support. Nevertheless, our market posture at the moment, given what's going on, given what's happening with the broad markets, the three major indexes that we look at, there's a bullish bias and there's a bullish uptrend, right? Yeah, Jumpin' Joe, I like that. Nothing has to happen, right? Nothing has to happen. Yeah, okay, Jay Richardson says, yeah, I say that, but maybe not right away. Okay, all right. Don't say too high to James. Yeah, absolutely. Okay, so maybe I'm not so different from James then, huh? All right. Yeah, I like that, Zinc. Stocks can be overbought longer than you can be liquid. Yeah, for sure. Will it pull back at some point? Probably. You can't beat the law of gravity. Okay, so here's the thing. And you got to think about what drives movements. Yeah, there might be corrections, but you think about what drives movements, whether it's on an S&P 500 basis, Russell 2000 basis, or individual stock basis. Institutional traders who, by and large, swing bigger sticks than we do. They buy, and then let price settle back. Buy, let price settle back. And then when they sell, and let price rise again. Sell, let price rise again. But again, they're in, even hedge funds which do long and short positions, by and large, the greater side of the appreciation curve is on bullish price appreciation. Okay. So we're going to find stocks, we're going to look for stocks that are trending in that market posture direction that the market has been moving generally, right? So, um, yeah, you can have corrections, you can have pullbacks, but all of those things are shorter term blips in the longer term trend, if you want to look at it that way. Now, that doesn't look. I'm not discounting the non-zero possibility that the market could something structural. One nuclear weapon could ruin your whole day. I'm just saying, but that could change the nature of the market for a long period of time. But at the same time, as trend traders, we've got to find those opportunities that are moving in the direction of the overall trend and moving with that bullish bias. So if our bullish bias is inherently up, SPX is moving up, Russell's moving up, NASDAQ's moving up, then let's look at some names that fall within this space that are also generally and have been moving up. Now, lots of different ways to find those. You can scan and you can search for them. You can build a watch list and you can find them. I happen to have built a watch list, and I'm going to jump over here to my single grid really quickly. And the idea is this. I'm going to pull up this particular stock, Johnson & Johnson. The idea is this, that on an individual basis, we follow those trends. An uptrend is higher highs and higher lows. Downtrend is lower highs and lower lows. Sideways trend is equal highs and equal lows. Johnson & Johnson, one of those, what has been a defensive name, but it's kind of almost been like the piggy bank against which tech investors have been rotating back and forth into Johnson & Johnson when tech is pulling back, out of Johnson & Johnson as defensive when tech is heating up. So risk on, risk off, growth on, growth off. That's benefited Johnson & Johnson here in the fact that over the course of the last year, that trend has been moving higher. And in fact, if we were to put a trend line on here, I'm going to come up to my gear icon up here, or actually my Erlenmeyer flask at the moment. I'm just going to turn on my 200 period moving average. And there's my 200 period moving average. 200 period moving average over the course of last year has been rising. Maybe it's flattening out a little bit. That's reflective of this intermediate term pullback. Next thing I'm going to do is I'm going to turn on kind of an intermediate term moving average, and that's the 50 period moving average. That 50 period moving average has been maybe moving down slightly sideways here. So Johnson & Johnson pulling back into a support level, but nevertheless, the long-term trend is up. I'm going to now turn on my shorter term moving average. And in this particular case, I'm going to use a 10 period moving average as kind of the most emergent moving average here. So 10 and 50 kind of going sideways, looking for this maybe break to the upside and that bounce and possible move. So the question is, as a trend trader, if we've got a long-term uptrend and we've seen a period of consolidation where the intermediate term trend has really done nothing other than kind of go sideways, as a trend trader, what are we looking for? Are we looking for a new entry? Are we looking for an opportunity to get into this trade? That's something that we kind of have to make that decision. So if this is fundamentally a stock that meets our characteristics, and it might be sitting in our watch list, now we're looking for an opportunity to enter the trade when we have confirmation that that trend is now resuming. Not that it's a guarantee that that trend is going to continue, but the trend is resuming and gives us a probable outcome that the stock continues to move in the direction of that existent longer term trend. And I think the first indication of that here in this particular stock is the fact that we found a level of support that was a previous resistance. And that stock bounced up off of that level of support, in this case, right around the 220 mark. That just simply confirms and validates the idea that there is buying pressure that exists here that's helping to keep that trend at the very least, sideways, if not moving higher. Had there not been support at that level, had there not been support at 220, and maybe it had moved down to the 50 or the 200 period moving average, that might be another level at which a trader, an intermediate term or maybe longer term trend trader, might be questioning, is there still enough buying pressure here? Is there still enough demand for this stock to continue to move this trend higher? So looking for that bounce at the 200 period moving average. Fortunately, we didn't, in this particular example, didn't have to get down to that level to test that. We got down to this horizontal level right around the 220 mark, bounced and moved higher from that level. It bounced off of that mark. And it bounced not on an earnings catalyst, not necessarily on a news catalyst. It bounced on the idea that maybe there was some buying pressure. Those investors that didn't get in back here, or those investors that did get in back here when it broke previously and said, you know what, we're gonna ride this trend entirely. And then said, all right, when it comes back down to that level, I'm gonna buy more, right? I'm gonna buy more, adding to the position when it feels like it's at a level at which there's some buying pressure going on and we get a bounce. Institutions might also be doing the same thing. Again, rotating in and out, but looking for a level of support as a mean to trade. But not all trend beginnings are created equal. So what I'm going to do is I'm going to come back over here to my Flask icon, and I'm going to put on a study set, a process of studies that we're going to add to this mix. And it's going to be a lot simpler than what I've got in this particular grid structure, because this is the one that I use for teaching a lot of different ideas. I'm just going to add this one into the mix, and I'll show you what it is in just a bit as we get into some of these. But I'm just going to open this one up, and I'm going to say, let's use this set. So I'm going to turn all of these off for just a minute, and we'll just come back to our view of the underlying stock. Don't worry, I'm going to share the grid with you here in just a minute, and give you that that information. But the first thing that we did is we looked at a moving average, right? So I had on there a 200 period, a 50 period, and a 10 period moving average. I'm going to go kind of somewhere in the middle of that. I'm going to go actually to about a 30 period moving average. And I'm just going to throw that 30 period moving average on here. And one of the things that I notice, again, much like the 50, much like the 10, we're right at, and this is what kind of attracted me to this particular instrument today, this particular underlying stock in my watch list of potentially trending stocks, is the fact that we're right at that 30 period moving average at the moment, testing it in fact. So if we've got a 30 period moving average, that's an approximation mathematically of where that overall average, and this is a simple moving average. You could use whatever flavor of moving average you want. Doesn't matter. There's not one best. But we're sitting right at that 30 period moving average. And the stock today is kind of holding back at that level. That would suggest that maybe there's a little bit of selling pressure right at that 30 period moving average. It also happens to be a horizontal resistance area right there at about that we're going to call it 231. Just right above where the price of the stock is. We're at 230.30 right now. So we've got that level of resistance overhead. So now that we've got that trend definition, still long-term uptrend, intermediate term sideways trend with the potential for a trend line breakout. So what we might be looking at here objectively in terms of a trend entry into this particular stock is this: a break of that horizontal resistance level, which was created by price moving up to that level and getting sold off. Those candles, those green candles, were met by selling pressure from somewhere, either institutions, large scale retail traders coming in and selling it at that level, saying when the price gets back up to that point to 231 or so, I'm going to start to sell these shares. And that pushed that price back down to the point where now it touched that 220 and we started to get some buying pressure again, started to see that move to the upside. So Wiley is ahead of me, half a step ahead of me here, saying, well, wait a second, couldn't we create a conditional order on this entry, on this potential entry that would be conditional upon a break of the 50 or 30 period moving average and a break of that horizontal resistance? And yeah, absolutely we could. We could create a buy stop order that says, stop, wait, don't do anything until price gets above a particular level and breaks out, then get into the trade. But before I get to that point, I want some confirmation. I want to feel confident, if you will, that there's enough momentum to push this price up through these levels of resistance. Two levels of resistance converging upon one another. That almost sounds like a poem, right? I encountered two levels of resistance in a wood, and I took the one that broke first. I don't know, something like that. I am not a poet. Um, I do enjoy poetry at times. So, market poetry. That's, yeah, okay. I like that. All right, so here's what we could do. Like we said, we could do buy stop limit, we could do buy stop order, conditional order, whatever we choose to do at that point. But let's see if we can add some things to this mix that might give us some additional confidence that price might break out of this resistance level. No guarantees, because there never are, but let's see if we can add some things to the mix. So the first thing I want to add to this mix is a momentum indicator. Now that I've got that moving average, I've got resistance. Yes, exactly, James, you got it. That was my attempt at Robert Frost for sure. So we've got that resistance level, we've got the moving average that we're kind of banging our heads into here. Let's see what's going on with momentum. I get a bit of the story from momentum by looking at the candles. You know, I had this doji candle down here. I have a gap up and a rally, but it's a long-legged spinning top, if you will, or a long-legged doji candle that penetrates into this range of the previous candles. And yeah, there you go. Two levels of resistance walked into a bar. I love that. And then I've got this big green momentum candle. So the story's already being told that there's momentum going on here. Now we get this, what's sometimes referred to as an advance block or a deliberation candle at a level of resistance when the market kind of says, well, do we have enough oomph to move through this resistance level? So let's see. Candles only tell us a part of the story. So what I'm going to do is I'm going to come back up here to my flask icon, and I'm going to use a momentum indicator. I'm going to use a momentum indicator that is A, going to be a little bit lagging, and B, it's going to be kind of an on or off. It's going to be kind of a binary scenario. And that is my MACD histogram. Now, there's other ways to display MACD that also emphasize trend. Yes, we definitely do need some Jimmy Buffett here. All right. So, well, okay, fine. Here you go. I'll give you that. I'm going to turn on my MACD histogram, and I'm going to click on apply and OK. And now I've got my MACD. So I'm sitting here at this resistance level, and I'm asking myself the question, or saying to myself, indecision may or may not be my problem here. That indecision candle may or may not be my problem. And, you know, so there we are. Now, how do we know that? How do we know whether or not there's some momentum behind this move? MACD, that MACD histogram, which is simply the difference between two moving averages that's then smoothed out again, that MACD histogram is telling us that we've got some growing bullish momentum. It's above that zero line. So I've got one additional, yeah, you're right. I've got one additional confirmation, one additional confirming factor to those candlesticks that I see moving up. We're still sitting right at that moving average and right at that horizontal resistance. So sentiment, or excuse me, momentum is moving to the upside. Green momentum, MACD divergence. MACD is moving higher when price is staying at an equal level. Great, okay. Now let's add some sentiment into this equation. Now, Eric, we're going to get there for sure. Next thing I want to do, in addition to adding that MACD oomph, is I want to get some sentiment indication. Sentiment is, are we bullish or are we bearish? Are buyers accumulating shares or are buyers distributing shares is another way to maybe put it. So I'm going to come over here to that flask icon again, and I'm going to add on here another kind of oscillating indicator. Now, you could use RSI, you could use the Awesome Oscillator, you could use Checking Money Flow, you could use stochastics. I'm in this case going to use the fast stochastic. And I'm just going to turn that one on. So I'm going to click on apply and OK. And so what I'm looking at, I've got a traditional view of the stochastic indicator where, much like the RSI, I have a reversal zone at 30 and a reversal zone at 70. Okay. So Wiley says, okay, I'm going to bet the farm. Interesting. Okay. So what we have is we have a MACD. Let me grab my magic marker and we can just circle these. I have a MACD increase in momentum. I have a move of the stochastics from a lower range, right, where sentiment has fallen off. And that's largely because those candles were red. We were getting pushed down. You were seeing lower closes. That sentiment changed and it moved to the downside. So now I have a green, what some people would refer to as a green arrow. I just happen to have that particular indicator pointing this out on that cross from below to above that 30 period lower reversal zone. Now, we do have something interesting going on because it very, very quickly, with that momentum, now this fast stochastics is going to be a more sensitive indication of sentiment than our momentum indicator. Because stochastics transited that zone between 30 and 70 very quickly, and it is now pulled back a little bit on this deliberation candle. Nevertheless, we've got bullish sentiment, we've got bullish momentum. That little pullback, as long as it's not dropping that 70 level in that move, that's telling me that sentiment is still in this case, still staying bullish. Helen, we're going to be back next year, so I look forward to meeting you there at that time. That Boston event was a great live workshop. We had a lot of fun there in Boston. Okay, so now we've got trend moving sideways, if you will, at a resistance level. We've got momentum indicating an increase. We've got sentiment indicating an increase. Maybe we ought to add something else into this mix. And that something else is something that, this is one, Eric, because you brought it up, that I'm kind of equivocal about. I'm not 100% sold on the idea at this particular case that this next indication is going to be something that's going to really give us some help here. And there's a reason for that. So what I'm going to do is I'm going to throw on here volume, and I'm going to click on apply and OK. So I've got down here a volume average with volume average display. So this is showing volume, and it's showing a 30 period moving average on volume. Now, Barbara asked the question, do I like stochastics better than RSI? Not necessarily. I think they're probably equivalent indicators. RSI tends to filter a little bit more than the stochastics, and especially the fast stochastics. But what I'm looking for, and I don't see it a lot, and I moved this moving average because by default that indicator shows a 50 period moving average of volume. I moved this average down to 30 periods so that I get maybe a little bit faster signal in terms of volume. But the challenge with volume, especially with a defensive stock like this, which Johnson & Johnson is, one that's held by probably a lot of institutions, even though if we were to look at the trade tab here real quick, and we were to look at Johnson & Johnson, it's trading with about a 1.6 million daily volume so far today. We're about halfway through the day, a little bit more than halfway through the day. So it's a pretty liquid stock, right? But we don't typically tend to see big volume spikes. So what I might even do in this particular case, I'm actually even going to speed that volume signal up a little bit more. I'm going to come up here to my flask icon. I'm going to change this from a 30 period moving average of volume. I'm going to match, I'm actually going to come down to a 10 period moving average of volume because that's going to be a little bit faster signal and it's maybe going to be a little bit more reflective. So now I've got a 10 period moving average of volume, maybe a little bit more effective at capturing the small volume spikes. This is the reason why I say I'm somewhat ambivalent about using volume, because volume tends and has for the last few years tended to be more normalized. You don't see the big spikes that we used to see. And when you do see spikes, those are typically on earnings announcements. So now that I've got this set up, right? I've got volume average, I've got a MACD, I've got stochastics fast, and I'm bouncing against the resistance here. Now I feel pretty confident that we might have a momentum move. What I notice is that the volume over the last couple of trading days, as we've had these big trades to the upside, has been fairly substantial. In fact, the big days have been right at or a little bit above that 20 period moving average, right? So you could have taken profit if you were trading, James, if you were trading a short-term trend trade or a swing trade. But remember, we're trying to get back into the trend. There is a little bit of profit taking going on here. That's where that move has happened. And now you're seeing some selling pressure. But we're going to start to look for that now new breakout here. So I'm going to set my price target, my buy stop target here a little bit above. So if I look at this candle, kind of zoom in here, I'm going to look for that high on that day. The high of that candle, high is 231.76. And I'm going to go a little bit higher than that. I'm actually going to go about 20 cents higher. I'm going to right click and we're going to say buy, but I'm going to edit this order to buy. Now, I'm not going to talk about stops because we've spent a lot of time talking about stops, but I'm going to make this a buy stop, and I could even make it a buy stop limit, but I'm going to say, look, I want to see if this goes above 231.90. I'm going to make it 94 because I don't want to be at a kind of a round number there. 95 is a little bit too round a number there for me. And I'm going to make that order good till canceled. I'm just looking at getting in once I have that confidence that it's broken the resistance level. I've got the momentum confidence. I've got the sentiment confidence here. Got volume as an indicating factor or a confirming factor. And I'm going to look at entering this trade. And I'm just going to put this in my stocks group. And we're going to click on send. And we'll send that order off. And now that's going to wait, right? Now that's going to wait. So... yeah, James, there are a lot of different ways to look at it. I honestly don't look at James Boyd's sector or weekly phases. I'm simply looking at this from the trend perspective, right? Short-term trends up, intermediate-term trends sideways, long-term trends still up. So I'm looking for a breakout of that area that's been creating that sideways movement. And I would agree, the sector's probably moving a little bit sideways here, maybe seeing a little bit of rotation as we're starting to get into some of those earnings announcements that are going to be driving this particular area. We've got an earnings announcement for Johnson & Johnson just over the horizon a little bit here as well. So there we go. Now we've got a way to go about. Now, any reason to use a buy stop versus a conditional order? No, not necessarily. A conditional order, however, is going to be a little more difficult to put. You could still put a limit on it, right? But so you could make it a limit order. It's 6 of one and half a dozen of the other when it comes to that entry into this discussion. Now, you might use a conditional order and say, look, all of these other conditions have to be met. You could create a conditional order that says study-based conditions like RS or stochastic still has to be above the 70. MACD still has to be positive. Volume average has to be above its 20 period or its 10 period average. So the conditional study or the conditional order entry would allow you to be a little bit more complex in your if this then that statement. If these things are true, then enter the trade. In this case, the only if then statement that we've got is if price is above 231.94, then enter the trade. And we're assuming that all of these other tools are going to stay the same. All of these other indicators are going to stay roughly the same. So you got to be cautious. One maybe takes a little bit more monitoring. So now there's Johnson & Johnson. Let's take a look at a couple of others that are maybe kind of giving us that same perspective here. One that I had noticed, and this is kind of an interesting perspective on, is actually giving us this scenario at the moment. Now, that being said, so this is the shoe manufacturing company, and they are past their earnings announcement. So I want to zoom in here. Trend has been moving down, but you notice that 30-period moving average is starting to move back in an upward direction, and price is moving above that level. So I'm going to just zoom in here on this right-hand side, and let's kind of go through what we've got. I've got price moving above the 10-period moving average, or excuse me, 30-period moving average. I've got the stochastics moving from its lower range into its upper range, and it's now above 70. And I've got MACD moving from its negative range, just a little blip there, and then blipping back up. And then I've got volume that over the last few days, as we've seen this movement to the upside, that volume is also spiking above that 10-period moving average. So even though this is going sideways, there's one maybe mitigating factor here that some traders might use as a means to say, let's wait. And that is perhaps this level of resistance. We're going to call it at 37 even. I'll just draw that line there. Level of resistance at 37 even as this price of the stock has kind of gone sideways. Now, some traders would say, you know what? I've got some strong indications of momentum. I've got strong indications of sentiment moving to the upside. I'm not going to worry about that horizontal resistance. Other traders might look at this and say, you know what? I really do want to see this move above that resistance level before getting into the trade. So I'm going to do exactly the same thing. I'm going to set a conditional order here or a buy stop that says if price moves above that resistance level. Because at this point, what do we expect to have happen at resistance? Price to bounce and move to the downside. But we got some mitigating factors here against that resistance level. The last time that this price got to that resistance level, and I want to kind of come back to that, that was back on 420. Volume was low. MACD was riding a momentum wave, but the stochastics was up in that area and starting to roll back down to the downside. So we started to see that bounce down from that resistance. Now I've got stochastics on the rise, MACD on the rise at an early phase, and I've got volume spiking. So I'm going to look ahead and say, look, I'm going to discount that resistance level. Now, perhaps at my peril, but maybe I'm not going to add the whole position here. Maybe I'll add half the position here and then half of the position when it breaks through that resistance level. So we're going to right click and I'm going to buy, and I'm going to come over here and edit this order. Now, I'm just going to do a default normally of 100 shares, but I'm going to do 50 shares here. And then I'm going to add another 50 shares to that mix. And I'm just going to say, look, I want to get into this trade when it's breaking because we're trading at 36.75. I just want to get into the trade and capture that trend if it moves. And then I'm going to put a stop on there or manage the trade as appropriate. So I'm going to go ahead and click on, let's put this in the stock group. There it is right there. Click on send. And we'll fire that order off. And now we are long 50 shares in anticipation of adding another 50 shares of on here, of On Holdings, the shoe company. So that's kind of the process. Moving averages above or at or below the 3. So we are above that 30-period moving average in this particular case. It closed above the 30-period moving average yesterday with big volume, and that's when we got that volume spike. So maybe the better time to have entered the trade would have been yesterday. That's usually the case. Best time to plant a tree, as they say, was 20 years ago. Second best time is right now. Now, obviously, we don't have the luxury of being able to go back in time and enter that trade, but this is a way that, in fact, that we can kind of talk through this process. So I promised I was going to share this grid and study set with you. So let me do this. Let me come up here to my Flask icon. I'm going to go to my study sets. And this one, as some of you have probably guessed, is 3 green. So we've got that over here on our chart. I'm going to go ahead and we're going to share this grid with the 3 green. I'm going to go ahead and share the grid, and that will have those study tools on there. Now, remember, anytime we share anything, that is for illustrative and educational purposes only. It is not guaranteed as to time or accuracy. So let's kind of crystallize this really quickly. Why do we talk about trend? Well, it's support of the directional expectation of the price of the stock. When we're in an uptrend, that is confirmation in and of itself, and uptrending stock, confirmation in and of itself that there is demand for that stock. Why do we look for additional confirming factors? Well, we want to get into a trade, a trending trade at an optimal time. Not the best time, just a good time to get into the trade, right? Paul, you caught me, right? You caught me with that answer. So, when trading the trend, identify the trend that you're looking for, identify the time frame, and use tools that can help you to confirm that that trend is either starting, is changing, or is continuing. So that's all we're doing in trading trend, is looking for a way to maybe optimize or try to optimize our entries and our identification of the trend. There's no magic to it, and there are lots of different ways to accomplish it. So let me pop over here really quickly. If you have questions about trading the trend, you can come over here to the Trader Talks webcast page. Great opportunity for you to click on subscribe if you've not done so already. Give us a follow there. But I'm just going to, if you're brand new to this, I'm going to send you over to my good friend Scott Thompson, who teaches a webcast called Stock Investing for Beginners. And I'm going to tell you this, even if you've been doing this for a long time, this is a great reinforcement of these ideas. And Scott has a great way of explaining that discussion. So good opportunity to kind of go back and review what we've been talking about. This is a strategy that he talks about on a regular basis. So join us over there. By the way, remember, you're going to see Barb in Chicago at the Market Drive in Chicago. So if you're in the area, come and join us. We're at the Renaissance Schaumburg. Then we're going to be in Santa Clara on the 29th and 30th doing an advanced option strategies workshop. That one is full. But then we're going to be in San Diego, and Barb's going to be there. I'm going to be there. Kevin Horner's going to be there, Ray and Scott. And we're going to be doing technical analysis and option strategies. We'd love to see you there. That's going to be the next opportunity to catch trend and support and resistance and momentum and all of those things is going to be in San Diego. So we look forward to seeing you there. And then we're going to be back in Chicago in the middle of July. So nothing like the Midwest in a hot, humid July, although, not a bad place to be. Guys, thanks very much for being here. Thanks to Barb Armstrong for helping out. And we will see you guys again very soon. Take care, everybody. Bye-bye.